You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we'd like to do cool things with financial technology. Today we have an interview with Luke Timberlake, who's the Executive Director of Fintech Sandbox. And let me just say in advance, anybody who's interested in the startup world and the process of companies going out and fundraising to fund their ventures, you're going to want to stick around for this one. This is, I think, a really, really interesting conversation. So that'll be coming up in just a second. Before that, I will remind you, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And I'm also going to remind you that the CU Town Hall, well, if you are listening to this right when our episode drops, you still have a chance to join us live on Wednesday, August 12th. Wednesday, August 19th. If it was the 12th, you would be way out of luck at this point. But the 19th is when we are doing our next one, 3 p.m. Eastern, noon Pacific. It is live, it is lively, it is interactive, it is free. You do have to request an invitation in advance, though, and you can do that by just clicking the button over at cutownhall.com. It's going to be a really interesting conversation. Brian Lay is an old friend of the Big Cast. You may recognize that name. He is a serial entrepreneur. He's done a few different things. The one that we got to know the best was one called Alpha Rank, which is still going. But he's got a new venture right now called VerifyDial, which is focused on defending against scams. And he's got an interesting model that I really think has a lot of potential. He's already got several credit union leagues lined up in support, so he's going to be telling us more about that. And we'll get into other details and information around breaking news and hot topics in the credit union world as well. But he will be our featured speaker this time. And kind of on that topic of VerifyDial, I noticed just a story just this week in CU Today about the Defense Credit Union Council and America's credit unions appealing to the FCC about doing more about caller ID spoofing that allows scammers to present themselves as financial institutions calling in. So interesting stuff. Brian will be talking more about that. Again, that's Wednesday afternoon on August 19th. If you are listening to this after that date, if you go out to cutownhall.com, you will probably find a replay, because we usually get that posted after a day or two. Before we jump into our main event, let me just kind of do a quick take on a couple of the stories in the news this week. We've been following this one for, I guess it's been a little bit more than a month now. That whole conversation where Stripe and Advent International made an unsolicited offer to buy PayPal, which was rejected. Well, news just broke just this past Friday that the Wall Street Journal is reporting that they actually are now talking, as the young people say. I'm not sure exactly how far along that is. They didn't say that anything was imminent, but there are conversations going on between those parties to see if they might be able to, well, again, as the young people would say, maybe it might lead to a situationship. We'll see. Only time will tell where that goes. In the earlier rounds, it was said that Advent, who have plenty of experience running payments companies, and Stripe, who obviously is nice and core to it, although has nothing consumer-facing in any real kind of normal sense, so I can see where their interest might be to pick that up. They said they were just going to run this as kind of a continuing entity in its current form, although I could see with a private equity firm and Stripe, potentially breaking it into parts. We'll see if those earlier kind of comments still apply now. The original offer was for $53 billion. No talk about where that's gone. We commented a couple times that the price of the stock did bump up a bit after it had been in the doldrums with announcement of that $53 billion bid. It never really went down even after PayPal rejected it in the press. And lo and behold, over the course of the last couple weeks, the stock price has been trending up. I'm recording this before the markets are opening on Monday morning, but based on after hours trading, it looks like the price of PayPal on a market cap basis, based on the market pricing, is $53 billion, almost exactly, which is interesting. But I think we can also assume that if they rejected that offer earlier, we're probably negotiating a price that might be a little bit higher than that. We'll see. The other thing I've caught my eye this week, and I've seen this reported a couple places, but I thought it was interesting to maybe take a different angle at some of the details in it. J.D. Power released its annual credit card rankings recently. It shows satisfaction ratings of various card brands. They make an interesting distinction between the rankings of cards that do pay and don't pay rewards. Specifically, co-branded airline credit cards tend to get the highest satisfaction ratings. And it does seem that Delta, which happens to be the card that I hold, does the best even out of those. But here's the other thing I thought was interesting. Premium cards, those that they define as carrying an annual fee of $300 or more, also come up with the highest satisfaction, whereas the no fee cards, and even more so the no reward cards, have declining satisfaction. There's clearly a gap where the premium cards have higher satisfaction, but that gap, their satisfaction is actually increasing, and the ones without rewards is actually declining. And the other thing they pointed out is even as the pricing on those premium cards is going up fairly dramatically in some cases, it doesn't seem to be affecting satisfaction, which is interesting. On the overall ratings, without regard to the type of card, Amex has been the top of the bucket for 7 years in a row now, according to this. I guess people probably wouldn't be too surprised by that. But when you get into the premium cards, I thought this was interesting. You probably remember, like I do, how Chase Sapphire was all the rage a few years ago, probably right around the pandemic or coming out of it when everybody was revenge spending and wanted experiences. They're still doing quite well, but for rewards cards that carry a fee, Amex is now back in the top spot for the second year in a row. And after that is Capital One Venture X. They're just barely ahead of Sapphire, but I'm not hearing as much about Sapphire. I think they did also realize that they probably had to scale back a little bit of their rewards. It was so rich and so exciting that maybe it wasn't all that profitable. But anyway, those are the top three. But the other thing that really caught my eye, there are no credit unions in the official rankings that are done by J.D. Power. But Navy Federal score is at the bottom in an appendix and or a little addendum to the chart. And if you put Navy Federal score back into the main competition, it would place second, just behind Amex and just ahead of Chase in their overall rankings. It says that for some reason, Navy Federal does not meet the study's awards criteria, because, you know, those little kind of lucite plaques that J.D. Power gives out for their top rewards. Not exactly sure what the criteria is for that, or if Navy Federal opted out or whatever. I was kind of reminded of the K-pop band BTS opting out of the Grammys this coming year in something of a form of a protest. Now, I got a feeling Navy Federal didn't opt out, and if they did, they certainly didn't get the same press for doing so. But I'd be curious. I'm going to see if I can find out a little bit more about exactly what was going on there. Enough of that. Let's get into, like I said, this is a really great conversation. I really appreciate Luke Timberlake, who is a very busy man, as you'll hear, wound up having to kind of adjust his schedule a bit. And we wound up recording this fairly early on a Saturday morning. So I really appreciate him taking the extra time to do that and sharing what I think are a lot of really interesting insights about the fintech space, and specifically the startup space and the data space. Here we go. I'm here with Luke Timberlake, the executive director of Fintech Sandbox, which I'm really starting to fully appreciate what you do. And why don't I just let you kind of kick it off with, you know, it's a not-for-profit, I understand, but your mission or value proposition, I guess maybe a better way of putting it, is to me pretty darn important in today's world of startups. Can you say a bit more?
Of course. And thanks for having me. I know it's been 10 years that we've known each other. And
Yeah.
I've really appreciated all that you've done, and would be remiss to say that I'm an active listener as well.
First-time caller. Good.
First-time caller. So what we do is, it's correct. We're an industry nonprofit. We like to say we're neither an accelerator nor an incubator, although we partner actively with organizations like that. And our main mission is to level the playing field for fintech entrepreneurs through providing them access to critical data sets that they need to build their business. And that's becoming more relevant in the age of AI and, you know, having to have clean data in order to build your models. So happy to dive into that a little bit more, but I'd say that's a pretty good overview to start.
Yeah, and just to give a better perspective on that one, you've got some pretty powerful partners, both funding the initiative in the first place, but the access to the data, which is, to me, golden and that's basically the draw for people to apply to participate in the sandbox, is they get a very rich set of data that they can work with.
Yeah, so we have industry partners that help fund our operations, everywhere from EY to Fidelity being some of the main partners that we work with. And then on the data side, we work with 40 plus institutional leading providers there as well. So we have data from Equifax, Plaid, NASDAQ, S&P, and then many other ones that touch upon climate and, other niche areas. And it's been great to see which companies request what data and why. And, that can even change every quarter, every month in terms of those trends too. So it's been great to see how that side of the equation works as well.
Yeah, it's amazing to me. It's like when I think about a sandbox, it's usually more a place to play in a safe space with the technology. But to me, this is a true sandbox where you can dive in and deal with some good real world data and kind of test out propositions.
Yeah, and a lot of people would think of sandboxes being on the regulatory side of
Yeah.
things. You think of other examples. And we also like to clarify that we're not involved in the policy or the regulation side of things. And, we're really just facilitating the intros between the data providers and then the early stage startups that we screen and then work with and try to create other programming and value add for outside of the data.
Now, you mentioned already that we've known each other for about 10 years and mostly in a different context. You have been heavily involved in the venture capital, early stage investing side yourself. Can you say a bit about your background there?
Sounds good. So I have spent my entire career in financial services, from Merrill Lynch in my banking days to moving to a private equity firm that was doing roll-ups within infrastructure. And then, yes, for the last 10 years have, prior to joining the Sandbox, I had founded an early stage venture capital firm that was focused on fintech and spent a great deal of my time. And, our investment thesis was in the Southeast, investing in pre-seed and seed fintech companies, primarily across banking, capital markets, lending, and insurtech. Those were the areas we focused on.
And this is why I actually asked you to come on because you were talking about the sandbox, but you recently spoke to a group of 10 early stage startups here in an innovation challenge competition we had going on here in Atlanta, Georgia. And you provided some really great perspective to that group. I think in some cases rather eye-opening with regard to the state of early stage investing right now. And so I wanted to kind of follow up on a few of those things. You mentioned that there are more fintech startups going on right now, but less funding. And I thought that was kind of interesting. If maybe you can say a bit more about a couple of the big players, the 800-pound gorillas, maybe taking a little bit more of the air out of the room, and the expectation of startups getting further along with less before they really go to the markets. I don't know where you want to kind of grab one of those threads, but I'd love to hear you kind of share with the audience kind of the perspective you brought to those.
So not to go on too much a tangent, but I'm always impressed to see those 10 companies that come out of the Innovation Challenge, and to see that even though Atlanta's a payments hub, that they're not all in payments. So that would be great to see. So it's good to see a diverse set of companies there. But coming back to your original question on thinking about fintech funding and the number of companies getting started, I think it's important to clarify a few different kind of trends that we're seeing there. So I would say in aggregate, more companies are getting founded in the age of AI because it's easier to use them for coding and for sales and for a variety of other factors. So you have to, in theory, hire less people. I mean, we can get into why this trend will or will not work in fintech in a little bit, because I think it's very important. But that's really kind of what we're seeing, at least in terms of the number of companies getting founded. And, the headlines are pointing to it. It's the age of the vibe coder, the entrepreneur, yeah. You name it, inside and out of fintech, that's what's going on. But if you look really at the funding, I'd say the number of companies funded in terms of the deal count has gone down, over the last quarters, or really, you can look at things from 2021 to 2024, where, you had a pretty big influx of capital into fintech. And then things started to shift, I would say, really 2024 to present day in terms of Honestly, a lot is still to be determined. I'm still
Yeah.
surprised about what I'm reading and what I'm seeing anecdotally as well. So the number of deals in terms of early stage fintech seed funding on a numbers basis is going down. If you look at actually the aggregate, and these are generalizations, but I'd say largely what the trends are, the actual amount of overall funding in fintech on a quarterly basis has actually remained quite similar, at least since 2023, 24. And so it's still way down from 2021, but the number of deals is down, but the number of aggregate dollar funding is, let's just call it about flat if you kind of look at the last 10, 12 quarters.
And I mean, it sounds to me like a typical mean median issue. You got,
Exactly.
again, the big kahuna is grabbing the vast majority of that money.
Exactly. So I mean, there's a few trends at play that let's call them the horizontal AI players, the open AIs, the Anthropics, you name it, of the world. I mean, they're raising about 45, 46% of all the venture dollars and not leaving that much for fintech or other areas of technology, such as the ones that are more vertically focused AI players, which I think really matters in fintech, given the complexities of sales, the regulations, the whole litany of other answers. But what you're seeing at the same time is that, again, mean versus median, don't have to get too much into the nuances, but the overall median valuations have never been higher, at least since 2019, 2020. But despite the amount of aggregate capital deployed on an investment basis being about flat on a quarterly basis. So it's kind of an interesting, haves and have not type dynamic that is definitely occurring. And it's unclear to see whether it's here to stay, as you and I have discussed offline, but right now it seems like that's the case.
Yeah, I love that phrase, and I never heard it until you brought it up at the last session. The whole notion of kind of the horizontal AI plays, and I want to come back to that in just a second because I like your thesis that you've kind of thought about on that one. But I want to come back also. I think you mentioned that the expectation of the monthly revenue run rate that a startup has to achieve in order to really be an attractive funding proposition seems to have kind of increased to a pretty good extent recently. And I guess again, you can kind of point to AI as the reason.
Yeah, definitely. I mean, there's always been a difference between the Valley and let's call it the Northeast, Southeast, which has been more focused on revenue in terms of fundamentals. I mean, you're probably seeing all these headlines that people are raising with a deck or a prototype and raising these massive seed rounds in AI, and that's primarily happening in Silicon Valley. So if you think about, let's say, revenues, which have become more important, or I shouldn't say more important, they've always been important for the East Coast investors, you know, it's been interesting because you've seen, and these are pretty general numbers, but let's just say for a seed round before 2024 or 2025, you needed around 100,000 of annual recurring revenues. So anywhere from, 8+ per month, which doesn't sound like a lot, but it's a feat in its own right
Yeah.
for any early stage startup. And now you're looking at 300 plus $1,000 for that same seed round to get raised. And I'd say a lot of it is kind of more anecdotal in terms of what we're seeing, where raising that pre-seed round of capital, which is even before obviously you raise your seed, that area of the market has at least, I should say, dried up. It's difficult to figure out exactly what those trends are because the data tends to be somewhat opaque. But in my view, I would say the pre-seed market and the pre-seed market, let's say under 1.5 million is actually okay, but most people were raising previously these large pre-seeds of 1.5 to 3, and that area of the market, I'd say, has basically gone completely quiet, whether it's fintech or other areas of technology.
And I get the impression maybe the reason that people kind of figure, okay, what do you need the money for? You can just vibe your code your way to a minimum viable product and see if it works. I mean, may be very misguided, but that kind of seems to be maybe the rationale as to why that's happening.
Yeah, and then you go back to fintech, for instance, where sure you could vibe code a product, but you still need, your SOC 2 and a lot of other early stage compliance and legal requirements, and those costs time and money, even if AI is bringing down the costs of, your legal bills in theory as well, because it's cheaper to draft, financing or enterprise partnership documents. So I'd say, for fintech, the theory has been kind of applied there, but it's, still these contracts take time with large financial institutions, and you still need some degree of runway to raise, or that you get from raising, even if that's the case as well. So I don't think it's that simple within fintech, but that's kind of the general trend and consensus among many early stage venture investors.
It makes sense. And that's another one of the planks, the pillars that we use for the very light, kind of educational program that we run here as part of our accelerator is, as everybody loves to hear about the piece around investment, which is here's the week before we tend to get into the compliance issues, the SOC 2, as you mentioned, which is not nearly as sexy, but it's the blocking and tackling that I think raises a lot of eyebrows, as did your comments, because like you say, the world's changing. The horizontal AI thing, this is where, in full disclosure, I agree with you. So maybe that's one of the reasons it really strikes me that I love your point here. The hypothesis is it's going to be much more difficult to have a very kind of niche-based solution for a specific sector, because these big AI companies can just basically turn a switch and kind of obsolete that kind of a point solution, because they can do anything.
Yeah.
And I know we've both discussed, in the fintech setting, you're not as sold that necessarily may be where we're going.
I'm not as sold, but I think it's important to understand maybe the perspective there first when it comes to fintech or other highly regulated areas such as law, for instance. So, you know, let's take law, even though it's not fintech. I'd say
Yeah.
it's very similar, but there's a thesis among many venture investors that the models that the perplexities, let's say, and the chat GPTs have made are going to be good enough as the equivalents, not to name names, but there's some large legal tech AI companies that are focused on, contracting and document review. But there's a theory that these larger models that are horizontally focused, the, chat GPTs of the world, are going to be just as good as the ones that are, vertically focused within the law, which is still a large subsector, but that the value for the vertically focused ones, because all they've been focused on is, the white shoe law firms on downwards, is that the value is not going to be in the tech. It's actually going to be in the value of the long-term sticky enterprise contracts with the law firms. And that's actually going to be the value or enterprise value that is created when these companies are sold. And I don't think it's that simple, but I think there's, a general consensus that, this is going to occur within fintech. And in some degrees, you're somewhat seeing that when it comes to wealth tech and, PFM tools and things like that, where Perplexity and all of the other ones out there have released tools to become your financial advisor in a box, and it's unclear whether it's safe to go about linking all your accounts or putting your financial data in there. But it's kept a lot of people, I think, from investing in new PFM tools that are focused on building this, whether they're leveraging AI or not. So it's kind of that wait and see approach. And I find it quite interesting to think about, because I don't quite have the answer, honestly. And,
If any of us did, we'd be.
Yeah, exactly. And it may be too early, unfortunately, whereas the innovation is short term, but the venture cycles where you see, in theory, who's more successful or not, we're just in the midway point of that, at least.
Interesting. And for somebody with the courage of their convictions, that sounds like it could be a place to get in at a, relatively undervalued sector of the market, which, and again, that's the kind of solutions that I'm the most excited about. So I'm be very interested to see where that one goes.
Definitely. And the last point I'd say is that a lot of maybe the fintech I don't want to say 1.0, but the fintech pre-AI was focused on front-end solutions and user experience. And now I think really a lot of the value that you're going to see within AI is actually going to be more on the back end and risk and compliance and back office fraud prevention actually is a huge area. Those types of subsectors of fintech, I think, will be a lot more. I think they'll benefit a lot more from the age of AI and being able to reduce headcount and increase efficiency and do all of the things that AI is supposed to be doing currently, but for certain areas isn't quite yet. Right now, it's the investment is kind of not really delivering the ROI.
Right. We're still waiting for that true inflection point and the real pickup to be as productive and accurate as we would hope it would be, or at least we've been told it will be.
Definitely. I mean, the value of these AI investments, whether at large corporates or, existing startups trying to adopt AI to remain competitive versus their peers that have started after them, I'd say a lot of that is quite unclear. And, you're seeing the data from it, whether it's from the large McKinseys and places you used to work to, the smaller think tanks as well. You're seeing that people aren't really seeing the value quite yet. And I don't think they have an agenda with that research.
Yeah. I want to make sure we leave a little bit of time. You're also involved in Boston Fintech Week, which is coming up the latter part of September, which I've yet to make it to, but you've made a pretty darn good case. I think I'm going to get there this year. I guess it's pretty much a 2-day program. Can you tell us a little bit about that?
So it's a 2-day program, but that is the conference that we have. It really runs over the week. So it's the 22nd of September through the 25th of September. But that's anchored by the Fintech Sandbox Innovation Forum that we put on, which is the 2-day conference that you mentioned at the Federal Reserve of Boston. And this year, the theme is actually quite relevant to what we've been talking about. It's fintech that thinks, but really dialing into AI and the impacts that it's had on financial services. So one panel that we're hoping to kick the conference off on is hearing from some of the large players that don't specialize, let's call them the horizontal players, and hearing from them as to how they're approaching financial services. And then in the afternoon, we're going to go into a panel on open source AI as it relates to financial services and hear from some of the open source AI model providers that are taking a lot of fintech and financial services by storm, I would say. So we're going to have curated panels, keynote speakers, and a variety of other programming, as I mentioned, throughout that week. And if you're an early stage startup who's raised under 1.5 million in funding and under 1 million in terms of ARR, you can get a free ticket by going to our website as well. So we're making it inclusive for the early stage startups that we work with, and then the broader fintech early stage community as well.
Wow, I had not known that you literally were offering. That's a pretty wide population that can get in there. And so,
Yeah.
what is the balance of the room for the early stage folks versus the more established players? Yeah, obviously you're trying to appeal to both.
So last year it was about 30% with the title founder and CEO. So
Okay.
we have some pretty interesting data behind that. And then the rest was, some venture investors, but a lot of players from the Boston financial services ecosystem. And so, our partners are Fidelity and a few others that are heavily represented in the room. But we're also taking a regulatory approach as well in terms of hearing from some of the folks, including the ones that are working on FedNow and some of the interesting products there. They will also be sharing more on their perspectives when it comes to real-time payments and a variety of other different kind of topics when it comes to what's relevant in fintech or what's becoming increasingly relevant, just where the trends are moving.
the more you say, the more I know I got to be in Boston that week. So we will post a link to the Boston FinTech Week. We will obviously also post a link to FinTech Sandbox. People want to find out more. That's probably the best, both sites, best place to really dig in.
Yeah, and then when it comes to the FinTech Sandbox side of things, we have an application on our website if you'd like to become part of our data access residency, that's where we help match the startups with our data providers, and that's probably the best way, assuming you meet the general criteria to get involved there. So I think those are two good ways, and like I said, I've really enjoyed talking about fintech, AI funding, and also being able to share a little bit more about our mission.
Yeah, and just for perspective again, what's your current size of the number of participating companies in the sandbox, and what's the broad criteria similar to what we're talking about for the conference?
So right now we're actually in the process of changing it slightly, and so I should say check back, because it probably will change a little bit more to work with some of the companies at scale, kind of given what we've talked about companies achieving more with less before they would raise funding, or some things in that regard. So
if anything, the thresholds are going up.
Yeah, the thresholds are going up, but typically it's early stage has raised less than 1.5 in terms of funding, and ARR on a projected basis is less than $1 million. Have to be incorporated, working on them full time. And I would argue, most importantly, have someone on your team who is able to work with the data full time. Someone that's technical, your CTO, you name it. I think that's important, to have someone dedicated on your team in that regard, to be able to work with the institutional data providers that we have.
Perfect. Luke Timberlake, Executive Director of FinTech Sandbox. Hope to see you. I got a feeling I may be seeing you at Finovate as well in New York, but also in Boston coming up at the end of September. Thanks a lot.
Sounds good. I appreciate it. Thank you.
It's kind of got a twofer there. We actually found out a little bit more about Boston FinTech Week, which I've never actually made it out there before. And based on what Luke had to say, I'm very, very tempted to get out there. It looks like it may work on my calendar, so I'm hoping I'm going to get out to Boston FinTech Week this year. But the whole thing with the FinTech Sandbox, I had not fully appreciated what they have in store in terms of the value that they provide. I'm reminded of that phrase that data is the new oil. And boy, if you want to grease the wheels for a new operation, this would be a great way to kind of get it going. So we'll post the links to both Boston FinTech Week and also to FinTech Sandbox for anybody who's interested in both finding out more about them or maybe even applying to their member program. With that, another episode of the Big Cast in the books. Again, my name is Glenn Sarvati, and you can find me via my firm 154 Advisors. You can also find me at the Best Innovation Group website, big-fintech.com, where you'll find lots of other interesting stuff about the Best Innovation Group, including the Innovation Club, which we've talked about before. Click through on that tab, see if that is something that turns your crank, and maybe we can put some grease from data, some oily data back in there and help you kind of move things forward. But again, that's a place where credit unions can really extend their R&D dollars by working collaboratively, which this industry does so well. You can find out more about that there. You can find out again more about the Credit Union Town Hall, the CU Town Hall. That is also a thing you can do by following directly to the URL cutownhall.com. And as I said, we've got Brian Lay speaking about scamming and ways to protect against financial scams. That will be on August 19th, Wednesday, August 19th, and at the website as a replay if you don't pick it up by then. Our Grand Poobah, John Best, can be found on LinkedIn, and as well as the Best Innovation Group at Big FinTech, at JB FinTech for both of those. As I said, my name is Glenn Sarvati. I'll be back next week. Also, Lucas was talking a little bit about the program. He helped us. He gave a great speech, a lecture to 10 startups here in Atlanta about the investment environment just a couple weeks ago. Those finalists are going to be on stage here at FinTech South. This actually probably right about the time that you're getting this episode. So I plan to be following up with them. And I got a feeling that next week we're probably going to have a few interviews from right there on site at Truist Park with some of them and some of those contestants, as well as some of the other folks with interesting things to say at FinTech South. So stay tuned for that coming up next week. Again, my name is Glenn Sarvati, and again, it's big-fintech.com if you want to find out more for the Best Innovation Group And again, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.